Today's tech news moves fast, but understanding it shouldn't be hard. That's why Snarful Solutions Group brings you Connecting the Dots, where we break down what's happening in tech and why it matters to you. Now, let's dive in with your hosts.
Hello and welcome to Connecting the Dots. It's great to have you with us on this Thursday, August 28th, 2025.
Absolutely. Thanks for tuning in. We're here to help you make sense of the tech world.
All right, let's quickly check in on what's happening outside the tech bubble. Nationally, there's some rough weather, heavy rain, and flash flooding threats across the central U.S. and down into the lower Mississippi Valley.
Yeah, and up north, quite the opposite wintry weather, even some ice potential in northern Alaska. Looks like south central Alaska is also in for some long-duration rain and strong winds through Friday.
Meanwhile, here in Sacramento, it's looking like a classic late summer day. Sunny skies, high getting up to about 95 degrees Fahrenheit.
Nice. Definitely warm. Okay, quick look at the markets before we dive into tech. Yesterday's close. The Dow Jones finished at 45,565.23. That was up about 147 points, or 0.33%.
And the S&P 500 also closed in the green at 6,481.40, up just over 19 points, about 0.30%.
Bitcoin's having a strong day, too. Opened around 111,261, closed near 113,352. That's a jump of over $2,000, almost 1.9% up. Pretty active.
Definitely. And some good news closer to home for baseball fans. The San Francisco Giants took on the Chicago Cubs yesterday, August 27th.
And they won. Nice decisive victory, 12-3.
Yes, great to see. Carson Whisenhunt got the win on the mound.
And Rafael Devers had a monster game for the Giants, went 4 for 4 with 2 home runs. Just fantastic.
Love to see that kind of performance. Okay, so shifting gears now into our main focus, the Morningstar Tech Report. We're connecting the dots on some major moves in the tech industry today.
Right. And our focus today is really on Nvidia, a company that's just central to, well, pretty much everything happening in AI right now. We've got 3 key stories pulled from our internal Snarful report that paint a really interesting picture.
Okay, let's kick off with the first one. This involves Nvidia and the massive Chinese market. Earlier this year, they got hit with a ban preventing them from selling their specialized H20 AI chips in China.
And that wasn't a small hit, right? We're talking serious money. It cost them an estimated $2.5 billion in sales just in the first quarter.
Yeah, and projected losses for Q2 were even bigger, maybe around $8 billion. A huge chunk of revenue.
Exactly. So the big news now is that Nvidia seems to be on the verge of resuming those sales. Reports suggest the U.S. government has given assurances that export licenses will be granted for these H20 chips.
It's kind of a quick turnaround, isn't it? From a ban costing billions to getting the green light, seemingly.
Well, what's interesting is these H20 chips were specifically designed around the U.S. restrictions that were already in place. So it's not a total policy reversal, more like an approval for a chip tailored for this specific restricted environment.
Ah, okay. So they engineered a solution specifically to meet the rules, and now it looks like that solution might be approved.
Precisely. It suggests maybe a more calibrated approach from the U.S. government now.
So what does this mean for Nvidia beyond just getting back some of that lost revenue? How significant is this potential return?
Oh, it's massive for them. Analysts are talking about potentially recouping somewhere between $10 billion and $15 billion just from China in the second half of this year alone. Yeah, and that could push their total revenue for fiscal 2026 towards maybe $19.5 billion to $20.5 billion. It's absolutely crucial for sustaining the incredible growth rate they've been on.
And it's not just any market, right? China is huge in computing and AI research.
It's the second largest computing market globally. And get this, it's home to roughly half of the world's AI researchers. So for Nvidia, access isn't just about sales figures, it's about being part of that innovation ecosystem.
Right, so losing access wasn't just a financial hit, it potentially slowed things down, cut them off from talent and ideas.
Exactly. And for the wider tech industry, this might signal, a subtle shift in U.S.-China tech trade dynamics. It also gives Chinese companies who, frankly, often prefer Nvidia's chips a bit of breathing room while their own domestic tech develops.
It really underlines how much these big geopolitical decisions ripple through the economy and affect these major tech players. Policy changes, and suddenly billions are back on the table.
It shows how fast things can move, but it's not quite a done deal yet. There's a pretty significant complication, which brings us to our second story.
Okay. There's always a catch, isn't there? What's the wrinkle here?
The wrinkle is this. The U.S. government has apparently expressed an expectation that's the word being used, that it should receive 15% of the revenue from these licensed H20 chip sales to China.
Wait, 15%? The government expects a 15% cut of the revenue.
Yeah.
Just expects it. Is that even like a formal rule?
Well, that's the crux of the issue. According to Nvidia's CFO, Colette Kress, there's no actual regulation written down anywhere that requires this. It's just an expectation. And crucially, Nvidia hasn't actually shipped any H20s under licenses that include this condition. They've basically said, hold on a minute.
I bet they have. What are their specific concerns, besides the obvious hit to their profits?
They're worried about potential lawsuits, naturally, increased costs, obviously, and they feel it could really hurt their competitive position. Plus, they've pointed out that the U.S. Constitution actually bans export taxes, which this arguably resembles.
So it sounds legally questionable, potentially unconstitutional, and there's no actual regulation backing it up yet.
Pretty much. It's a very unusual situation.
It's like you said before, agreeing to buy a car, but the dealership says, oh, by the way, we expect a 15% cut of your earnings for the next year, details TBD. You wouldn't sign that.
Exactly. It creates huge uncertainty. That 15% would obviously bite into their margins significantly. But it also makes investors nervous, and Chinese customers might hesitate to place big orders until they know the final terms.
Which is probably why Nvidia left these potential H20 sales completely out of their financial forecast for the next quarter, right? They just can't bank on it yet.
Correct. They flagged these geopolitical issues as the reason. This whole 15% expectation is the geopolitical issue holding things up right now.
It feels like a new kind of government-corporate negotiation almost, setting a potentially tricky precedent for other tech exports in sensitive areas.
It really could. If this stands, does it apply to other companies? Other technologies? It's a big question mark. It just shows that even when you think you have a green light, these regulatory and political layers can add significant risk and delay.
Fascinating stuff. Okay, so that's the complex situation with the H20 chips. But there's another quite different financial story about Nvidia that also caught our eye in the Morning Star report.
Yes, and this one is purely about shrewd financial strategy, it seems. In their second quarter results, Nvidia reported something called net other income. And the number was, well, staggering.
How staggering are we talking about?
$2.2 billion.
Billion, with a B, from other income, not from selling chips.
Exactly, $2.2 billion. And the report stated this gain was primarily driven by gains in a publicly held equity security.
Okay, decoding the finance speak. They made a ton of money on a stock investment. Which one?
CoreWeave, remember them. The AI cloud provider, one of the big players offering access to, guess what? NVIDIA's GPUs.
Ah, CoreWeave, right. The ones provided the infrastructure that uses NVIDIA's hardware. So NVIDIA invested in them?
They did. And during NVIDIA's fiscal second quarter, CoreWeave's valuation apparently exploded, went up by 175%. So NVIDIA's investment just ballooned in value.
Wow. So they're not just selling the gear, they're investing directly in the companies that are successfully using that gear. That's pretty smart.
It's incredibly smart. It shows they're not just a hardware company, they're building an entire ecosystem and they're investing strategically within it. It's like selling the picks and shovels during a gold rush and also taking a stake in the most successful mining operations.
That's a great analogy. And that $2.2 billion, that significantly boosted their overall profit for the quarter, didn't it?
Hugely. It was a major contributor to their overall net income, which was a mind-blowing $26 billion for Q2. This CoreWeave game provides a really nice cushion against uncertainties, like, the whole China H20 situation we were just talking about.
It shows remarkable financial diversification and resilience. You could almost say their investment arm alone is performing like a top-tier company.
You really could. Someone pointed out their asset management function, just based on this, would rank among the most profitable companies in the S&P 500 on its own.
That's wild. What does this tell us about the broader AI landscape?
It highlights the absolutely explosive growth happening in AI infrastructure. Companies like CoreWeave that provide the computing power are scaling incredibly fast because the demand for GPUs is just insatiable right now. And NVIDIA is perfectly positioned to benefit both by selling them the chips and by investing in their success.
It really paints a picture of NVIDIA playing the game on multiple levels: hardware dominance, strategic ecosystem investment, and navigating these complex global trade issues, all at the same time.
It's a masterclass, really. It shows how companies in these cutting-edge fields need to be thinking way beyond just their core product. Partnerships, investments, policy, it's all interconnected.
Absolutely. So let's quickly recap the dots we connected today for you. First, we looked at Nvidia's potential big return to the Chinese market with their H20 chips, a move that could bring in billions but hinges on final U.S. approval.
Then we dug into the major sticking point, that proposed and frankly unprecedented 15% revenue commission the U.S. government apparently expects, creating significant uncertainty and potential legal hurdles.
And finally, we saw Nvidia's other financial engine making a massive $2.2 billion gain simply from their investment in CoreWeave, showcasing their strategic position not just as a seller, but as a key investor within the AI ecosystem.
Right. These stories together really show that dynamic mix of technology, global politics, and sharp business strategy that's shaping the future of AI and, really, the global economy. Understanding these pieces helps make sense of the bigger picture.
It reminds us that tech progress isn't just about the inventions themselves, but also about these intricate webs of finance, policy, and strategic maneuvering happening behind the scenes.
Definitely. And it leaves you thinking, as AI and other critical techs advance, how much tighter will that knot between government policy, national interest, and corporate strategy become? What kind of playbook is being written right now?
Definitely some food for thought there. We hope connecting these dots was helpful.
We're here to help at Snarful, so reach out on our website if you have any more questions.
That's a wrap on today's top stories. Remember, tech doesn't have to be complicated, and we're here to help connect the dots. If you've got questions or want to learn more, visit us at snarful.com. Thanks for listening, and we'll catch you next time.